So in this video today, we are going to be doing a tutorial of the M1 Finance investing app. I'm going to be showing you guys around the app and talking about some of the basic functions that you need to be familiar with as somebody who's investing with this platform. Now that being said, if you decide at the end of this video that you want to open up an account with M1 Finance, I have a link for that down in the description below. It is an affiliate link, so if you do use it, I will earn a small commission in the process. But that's at no additional cost to you. So if you decide you want to give back to me for putting this video together, that is an option for you. And one other thing I want to mention real quick, I have been getting a lot of questions from people about how to use M1 Finance, how to open a brokerage account, all of these different questions. So I actually put together a completely free 30-minute video training showing you everything you need to know to get started with M1 Finance, and that is also going to be linked up down in the description below if you want to check out that free 30-minute training on how to use M1 Finance. But we're going to cover most of the basics right here in this video today. Okay, so here we are inside of my M1 Finance portfolio. This was originally a $100 investment I made, mostly just for demonstration purposes to show people what this app actually looks like. So my original investment here was 50% of my portfolio into the Vanguard S&P 500 ETF under the symbol VOO, 30% into Amazon stock, and then I had 10% in Apple stock. And then I also put 10% of my money into Microsoft stock. Now, obviously, this portfolio has actually done pretty well here over the last, I believe, 8 or 9 months. It's up about 17%, closer to 18 actually. And this is the first thing you have to understand about M1 Finance, is that everything comes back to this pie here, or portfolio. So with M1 Finance, you are doing portfolio-based investing. And that's where it's different than apps like Robinhood, for example, where you're just buying whole shares of stocks and then, having those stocks within your portfolio. Well, with M1 Finance, you design a portfolio yourself, or you use one of the expert portfolios. And then as you add more money to that portfolio, it's going to be spread evenly across those allocations. So in my case here, when I initially invested that $100, 50% of that money went into the Vanguard 500 ETF, 30% went into Amazon, 10% went into Apple, and then 10% went into Microsoft. Now, I've already have my portfolio or my pie in here built, but when you actually get started with M1 Finance, it walks you through the process of building your own portfolio. But I'll show you guys what that looks like now by building a new portfolio from scratch, so you see what this looks like step by step. So now we're gonna go through the process of building a completely new M1 Finance pie from scratch. And like I said, when you start off using the app, it's gonna walk you through this process of how to build your first M1 Finance pie. So we'll go ahead and hit the plus icon here, and then we're going to begin adding slices to our M1 Finance pie. So your total pie is going to be 100%, and each of these stocks and ETFs that you can select can make up as little as 1% of your portfolio. So if you wanted to put 100 different stocks in your portfolio, I don't know why you would, but M1 Finance allows you to do that. So we're just gonna make a random portfolio here just so I can show you guys what it looks like. We're gonna start off with 3M stock. That's just one that's coming to my mind here. So 3M is a pretty popular company. I think the symbol is MMM. 3M company, so we're gonna add that to this pie. We're gonna also go with Procter & Gamble. We'll add Procter & Gamble to this portfolio. And then let's say you also wanna add an ETF to this portfolio for some passive investing. You can move over to the ETF or funds column and select one, or I know the one that I want. Actually, it's right here, VOO, the Vanguard 500 fund. So we'll add that to the portfolio as well. And then let's say we also want to have a tech stock in here. So let's say you like Tesla, for example. So we'll go ahead and type in Tesla. And let's say these are the 4 components of this portfolio that you're building, or pie, whatever word you want to use there. In terms of M1 Finance, it always comes back to the pie, and each stock represents a slice. So let's say that is the pie that you want to build, basically investing in Tesla, 3M, Procter & Gamble, as well as the Vanguard 500 fund. Then you would go ahead and hit done, and this is the point where you're going to decide how much of your money is going to go into each one of these stocks or ETFs. Now, the reason you're able to do this is because M1 Finance allows you to invest using fractional shares. So all of these different funds and stocks are trading at a different share price, but M1 Finance allows you to buy as little as 1/10,000th of a share of each one of these stocks. So you don't have to worry about that share price, and you can create, a well-diversified portfolio with the minimum to get started with investing, which is just $100. So let's say, for example, you want to put 30% of your money in the Vanguard 500 fund, and then you want to put 15% in Tesla, you drop that down to 15, and then you want to put, 20% in 3M, and you want to put the remaining 35% in Procter & Gamble. Well, now you have created this pie here, and when you add money to this portfolio, 20% is going to go to 3M, 35% is going to go to Procter & Gamble, 15% goes to Tesla, and 30% is going to go to Vanguard. So we'll go ahead and save this portfolio here. I'm not going to personally use it, and we'll just go ahead and name this the demo portfolio, just so you guys can see the functionality and how this works setting it up. And the other thing that's really great about M1 Finance is you can create multiple different portfolios and even track that progress. So if you wanted to make like a dividend-oriented portfolio or a growth-oriented portfolio, you could invest in both of them, or you could just use it to benchmark these stocks or this portfolio and see what the performance is like. Now that being said, let's say you're somebody who doesn't want to build a portfolio from scratch. Well, another great option that you have is the expert pies offered by M1 Finance. They have over 30 different portfolios that are pre-built that are completely free to investing. For example, you have general investing here, which is just a spread of ultra aggressive to ultra conservative portfolios. And each one of these you can click on and read about them and what is actually held within that portfolio. And it'll show you what is actually in here. It's usually Vanguard and iShares type ETFs because those are very low fee index funds. So you have a general investing category. You have plans specifically for retirement, which is great for people who invest using a Roth IRA, which is available through M1 Finance. You also have responsible investing for people who are looking for environmentally friendly companies to invest in. Income earners, hedge fund followers, basic stock and bond allocations, which is just going to be a 2 ETF fund. For example, this one that's a 90-10 split is just going to be 90% into the total world stock market and 10% into the total bond market, which is as simple as it gets in terms of your basic stock and bond allocations. So M1 Finance really does have something for everyone here. They have the ability to build your own portfolio from scratch with whatever stocks or ETFs you want to invest in. Or if you don't want to do all of that yourself, you simply pick an expert pie that's pre-built to automatically invest your money in. Now, the last thing I want to cover in this tutorial here is the rebalancing of the portfolio, which is something that a lot of people get a little bit confused on. So we're going to cover what that actually means here. So as you can see here on the left, we have 2 percentages under each one of these pieces of my pie. Under the Vanguard 500 ETF, we have 48% and 50%, and that means that my target allocation for the Vanguard 500 ETF is 50%, but I'm currently at 48%. For Amazon, it says 27.6%, even though my target allocation is 30%. Apple, it's 12.3%, even though my target allocation is 10%. And then finally, Microsoft, 11.9%, even though my target allocation is 10%. And this is because of something called portfolio drift. And the reason behind that is as soon as you invest money in the stock market, well, things are going to be doing different things at different times. That's the best way to explain it. So some stocks are going to go up, some are going to go down. I happen to pick 4 that all went up. If you look on the right-hand side, I'm up 40% in Microsoft, 45% in Apple, which is crazy. I wish I bought a lot more. I'm up 7% in Amazon and 13%, closer to 14% in the Vanguard 500 fund. The issue being, this portfolio is no longer in line with what my target allocations were. So what would happen as I add more money to this portfolio is more money would flow into the ETFs and stocks that I'm underweight in. So right now I'm underweight in Amazon and the Vanguard 500 ETF because my target allocation for Amazon is 30 and I'm at 27.6. And my target allocation for the Vanguard 500 fund is 50 and I'm at 48. So I have more money than I want in Microsoft and Apple and less money in Vanguard and Amazon. So if I were to add more money to this portfolio, slightly more would flow into Vanguard and Amazon to bring me back to my target allocations. And this is a really important feature for maintaining the portfolio that you're looking for, because a lot of people, they may say, hey, I want to have 25% in these 4 stocks, an equal amount in each. And then a year later, your portfolio could be totally out of whack because of portfolio drift. But M1 Finance takes all of that out of the equation here, because as long as you're contributing regularly to this account, they're going to keep your portfolio in line with what your allocations are that you set at the beginning. But that being said, guys, that is the basics here of investing with M1 Finance. Like I said, you can either build your own portfolio from scratch, or you can use the expert portfolios available to you for free, or you can do a mixture of both and invest in both with this platform and compare the performance of both. As I'm sure you guys know, M1 Finance is 100% free. They are making money, but they are doing so on the back end with a couple of different methods. For example, they make money by directing order flow, and they also make money from their M1 Borrow, which is going to be margin. Not really stuff that most people are using, so I didn't cover it in this tutorial. So they're not a charity. They are making money, but they're just doing it in a couple of different ways than the traditional method of charging fees and commissions to customers. But anyways, guys, that's going to wrap up this video. I hope you enjoyed it. If you're looking to learn more about how to use M1 Finance, I literally walk you guys step by step through the entire process in that free 30-minute training. That's going to be linked up down in the description below. But thank you guys so much for watching this video. I hope you enjoyed it, and I will see you in the next one.